What's going on, YouTube? Welcome back. Stocks by the numbers here. Sorry I haven't been around. Been doing a lot of work on the house. A lot going on here. Weather getting warmer. Had to do a bunch of crap. But hey, we're back to business today. Today is Wednesday the 12th. Hope everyone's having a good April. Just coming off Easter weekend. Hope everyone had a good weekend. Hope the family's doing well. God bless. All right, let's get into it. Shout out to Fat Chin, who said, hey, let's look at STEM. All right, let's look at it. Name of the company in question, STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. This company right now trading $5.07, down 17 cents, 3 1/3%. We come down here looking at some of the numbers here. $785 million market cap. Company is losing 81 cents per share. We switch over here to the earnings side. You can see estimates and actuals alike consistently decreasing quarter over quarter. However, the revenue has been absolutely explosive quarter over quarter, going from the $40-50 million range up to north of 60, north of 90, north of 150. These jumps, let me tell you something, these jumps are absolutely nothing to sneeze at. The one thing that scares me as to why probably regardless of all of these numbers being reported, the stock has basically just kind of been sliding. Well, it's two reasons. First of all, apparently, whether the company makes $40 million or $155 million, they're still at the same net income negativity of 30 plus million, right? Which always makes me laugh. I can appreciate the fact that the profit margin is rising with it. However, it just always makes me laugh. It's like, if we make 20 million, we're losing money. If we make 160 million, we're still losing money. But again, I know a lot of people are probably going to jump down my throat for that statement because this is a newer stock, newer company. Okay, I get it. So as we see here, coming out 2020 SPAC, this company came out, exploded to north of $50 and has since really been bouncing around, went to the low teens, north of 30, all the way down here to single digits, back up to almost 20 here at one point, and has since been sliding. Over the years, the company has been doing very well, bringing in, as we see here, about $363 million last year. Now, that's a little over 2 times yearly revenue, which really isn't that bad. The one thing that's bad, first of all, apparently UPS, I don't know. Apparently, this lead analyst is like an alcoholic or something, because they thought it was going to 18, and now they say 9.5. Now, I don't know about you, but I used to be in the industry, okay? And if my analyst came to me and said it's going to 18, and then came back and said, no, it's going to 9, I would fire that person. That's just me. That's just me. I'm that kind of guy, right? You can't be 50% off. You can't. If you tell me 18 and it goes to 15, 15.5, all right, fair enough. It almost got there. Yeah, well, you said it was going higher, right? It went higher. All right, fantastic. You think it's going from 18, now you say 9.5. So what happened? Well, as we see here, STEM prices upsized $200 million green convertible senior notes offering. And that obviously did not sit well with shareholders. As you see here, they hit a 52-week low after planning to offer $175 million, and it's recently been up to $200 million. And now you have, as you see here, Wolf Research downgrades STEM, and UBS lowers their price target, right? So now people are worried about this dilution. That's what always happens anytime a company, issues more shares or does a reverse stock split or anything like that. So now with the stock sitting at $5, the real question is, do we jump in, or is it going to go lower? Well, again, trading about 2 times yearly revenue. So if it maintained like this 5-ish level, I would not be surprised. I really, really wouldn't. But again, the one thing that they're looking at is probably the profitability. And the fact that the company is just consistently bleeding, missed on the EPS side 3 out of 4 of the last quarters. And of course, switching over here, look at this. Revenue goes from 66 million to 99 to 155. Yet, regardless of that income coming in, the company is still losing 30 plus million every single one of these quarters, right? So something's going on with this situation. However, regardless of any of these negatives, If we come down here, first of all, a little recap on the company here. Engages in the provision of energy storage system, hardware, ongoing software platform, professional services, solar asset. Okay, so the company is in this green energy storage space. Okay, awesome. The good thing is that this company is headquartered in San Francisco, California. And they have their website right here. So if we click on their website, we can go and we can see up here resources, incentives, and programs. And you can see just a nice, healthy list of incentives and programs that this company is involved or looking to get involved in. And, a situation like this, the National Electric Vehicle Infrastructure Program, as we see here, the Bipartisan Infrastructure Law, BIL, establishes a National Electric Vehicle Infrastructure, NEVI program, to provide $5 billion over 5 years in funding to states to strategically deploy electric vehicle charging infrastructure and to establish an interconnected network to facilitate data collection, access, and reliability. So basically, not only is that what this company does, but also if we go back to our news articles, where is it? There we go. As we see here, I'm going back to earlier in the year, STEM ChargePoint form joint venture for EV charging sites. Now, I don't think I ever spoke about ChargePoint on this channel. I think I did a quick video on Blink, but obviously, the more electric vehicles there are, the more charging stations you're going to need, right? And like we read on the site, the bill says, every 50 miles? Yeah, charging infrastructure every 50 miles. So, if these companies are going to come together, do these joint ventures, slap up these charging stations, and they're going to use their software to kind of, overlook the entire system, it's obviously going to work out very well for these companies, right? I mean, it's really that simple. And even here, these incentives usually cover half or more of equipment and installation costs, which supplements the 10 to 30% utility bill savings energy storage systems typically deliver. So with states like California stating that you're going to basically have to drive an electric vehicle by 2030, I think it was. This is why people are so hyped and jumping on board all of these new small cap EV companies and all of these small cap tech companies, these charging station companies. That's what I'm saying. So the rise in revenue cannot be overlooked. You can't just start climbing from 20 to 70 to almost 200 million in a quarter and have people act like, they're just going to continue to sell off your stock and you're still overvalued. So I like the story of STEM, but more importantly, I love the money that's starting to flow into this company. And again, over 300, how much was it? Over 360 million last year. And the company's worth $780 million. So again, I understand that they're upset about, the $200 million convertible note offering, and they feel, it may add to dilution of shares. I totally understand that. However, at 506, it may not be the worst buy in the world. It really, really may not be. We switch over here, we can see that assets have been significantly growing just in the last 2 years. Of course, liabilities going along with it. But again, we have assets to liabilities almost about a 2-to-1 ratio. When the liabilities outweigh the assets, that obviously is a pretty big negative. Companies showing book value per share of $357. This is what I'm saying, right? So it looks like even when we go back here, when they beat it up initially, you can see the low at the top. Again, the O, the H, the L, the C. That's the open, the high, the low, the close. You can see the low, the L, was 572. Even over here at this candle, the low is 607. So now this is like the lowest it's been, right? If we come down here to this candle, where was it? Low, 466. All right. So. Okay. So they're looking to issue roughly 200 million of these notes, right? The market cap right now is about 800 million, we'll call it. Let's just round up. So now you're issuing roughly 25% of wait, hold on. You're issuing 25% of new notes equivalent. No, wait, well, hold on. You're issuing. I'm trying to say like three things at once. That's why I'm getting confused. So the company is issuing notes valued at 25% of the company's market cap, right? And that was announced when? 30th. Upsized to 200 million. Where are we here? 30. Okay. So the 30th. And as we see here, the high at the top was 585, the low 546. Right? So let's kind of go right in the middle. Yeah, we can use 5.5. Now, let's bring up our calculator. Okay. And we do, we'll call it 550 times 0.25. And we get $1.37.5. Okay? So now, if we do 550 minus $1.37.5, that's the low. Okay? That's the low. And again, I just want to go over how I got that. Okay? So March 30th, 200 million. Right? Again, this is the 30th. As we see at the top, it hit a high of 585, hit a low of just below 550, so I used 550 as our benchmark. I went with the lowest price to give you guys the absolute potential of the lowest low that we could see, right? So think about this. Stocks at 550, company's worth 800 million. They're issuing 200 million more, which is 25% of market cap. So stock price could drop 25% from those levels. Again, 550, 25% is $1.37.5. 550 minus that $1.37.5 brings us down to $4.12. So that, in my opinion, should technically be the short-term low. And as we see here, even coming off this negative news, the stock hit 466 and has since bounced and risen straight back up to about 5.5 before slightly pulling back a little bit. So obviously, it could continue to take another leg lower and drop down towards the lower fours. So in my opinion, that may be the low. However, I don't really have much negatives to say with the stock here at around $5. And even if you were to begin piecing your way in at 5, and then let's say it drops back down to like 450, and that's like the low. First of all, yes, it is a 10% drop. Obviously, that would potentially hurt in the short term, but like we always say, if we like it at 5, we're going to love it at 4.5. So if you're someone who has been involved for a while, and you may be potentially looking to add to a position here, it may not be the worst time to start piecing in, right? So again, they brought it down to this low, and they had a little slight bounce. Now they're pulling it back again, so it could pull back and again retouch this of 460, 455, have a slight break here on this trend line. So you could potentially get in for a slightly better price, but again, overall, in my opinion, I think 412 technically should be the low. Based on the numbers that we just ran. However, again, looking at this company growing annually and especially quarterly with this growth in revenue, I really do think we may have a pretty big winner on our hands here. According to Analyst, here we got roughly a $13 price target. I do know that UPS just lowered their price from 18 to 9.5. However, 9.5 is roughly almost 100% move from where we're currently sitting at. So, if you're telling me worst case scenario, I can double my assets, I mean, it's not a bad scenario, right? But overall, I wanted to go back and I wanted to look at these numbers real quick. And again, going down to 412.5, again, would be even closer to the book value per share, which is why, I mean, that's why I'm saying, in my opinion, if it breaks 5 and approaches that 460, 450 mark, I would be all over it. I really would. That's just my opinion. That's just my opinion. Because now, again, the all-time low that we looked at will potentially be $4.12. You have a book value of $357. So, of course, just like with any equity you purchase, you may potentially deal with some short-term volatility. However, knowing it can't completely crater and it has some sort of bottom support level here for it to bounce off of in the long term, you know, it could be worse. It could be worse. So I do like the whole story here. I do like the situation. As we see here, the cash is really just bleeding across the board here. Company minus 100 million cash flow. We looked at the assets. And again, as we switch over here to the revenue, I mean, you know, going from 36 million to 360 million, I mean, they 10x the revenue inside of 24 months. That is nothing to sneeze at, folks. So that's why I'm saying, yes, a couple of things are looking negative. However, the growth of the revenue cannot be viewed as a negative in any way, shape, or form, even if you look at the EPS side. And in my opinion, it's only a matter of time before this company really becomes even more profitable. The cost of goods is almost in line with revenue. However, the company is still able to bring in a profit of roughly 36 million off of said revenue. And of course, the operating expenses are what's really destroying these numbers here on this income statement. Operating expenses north of 150 million. So this is why a lot of analysts are really watching this stock closely, because they want to see if they can increase these profitability ratios and really turn this company into a massive moneymaker. But again, they're in California. California's pushing for EVs. They do EV charging storage stations. They did the joint venture with ChargePoint. So that's why, in my opinion, I really think this company could potentially take off. And I'm talking just California, right? So think about that. Let's just say California kind of does their own thing, and the other 49 states are like, you know what, you're crazy, we're not doing that. Okay, fine, fair enough. Just in California alone, before this is even being enforced, right? Because we're in 2023, and I think they said by what, like 2030, 2035 or something, they want all electric vehicles in California. So if that happens, with the growth we're seeing now in this company, 7 years supposedly before this EV deadline, just imagine the dollars that are going to be rolling in 3, 4, 5 years from now, right? Just keep that in mind. So overall, again, I really do like this story. We have no PE because that is the price compared to the earnings, which is EPS, which stands for earnings per share. The company is negative earnings per share, so there is no PE ratio. They're trading a little over 2 times sales right now. They have negative cash flow, so there is no price to cash flow ratio. And again, as we looked, less than 1.5 times book value. Book value again, $3.57, stocks at $5. And again, this is our enterprise value, which they state is the value that another company would have to pay to buy the stock out, to buy the company out. And as we see here, enterprise value 1.1 million, market cap right now sub 800 million. So if the company gets bought out tomorrow, they're going to get roughly a 25 to 30+% premium based off current valuations, and they're going to be worth north of $1 billion, not 778 million or whatever they're currently worth now. So that's very interesting. The return on assets, as we see, is negative, however, was in a very, very deep hole and has since been climbing up, sub minus 13%. Now we're in minus single digits. The return on equity, basically same story, was minus 90+%. Now it's minus 20%. Return on invested capital, also minus 90%, now minus 11.5%. Gross margin percentage goes from negative to single digits to double digits, has since slightly pulled back, roughly 1%. And the operating margin going from minus 127+% to minus 60, minus 30, minus 20. So a lot of these numbers are moving in the right direction. Look at the EBITDA margin, earnings before interest, taxes, depreciation, amortization, minus 77%, up to minus 44, minus 22, minus 16. The net margin percentage, again, the company is operating at a loss right now currently with those operating expenses really hammering away at the income itself. However, profit margin, look at this, minus 400 plus percent, minus 79, minus 34, minus 22. So, inside of, I'd say, the next 18 to 24 months, I think, in my opinion, this company is going to be wildly profitable. Look at the inventory turnover, going from sub 2 to 10 to 21. And even the asset turnover started out again, 0.18, 0.16, now up to 0.28. So what they're showing you is they're doing more with their assets and they're turning over more inventory. And obviously that is common sense because we're seeing revenue jump from 40 to 80 to 150 million. And again, the assets are outweighing the liabilities. These are all good things. We switch over to the forecast and we can see EPS rising to a loss of 71 cents, jumping up to 37 cents. That's about a 50% increase. And then going positive in 2025 to plus 14 cents a share. That is phenomenal. So that is almost a full dollar per share swing over the next roughly 24 months that they're forecasting for this company. Revenue has grown again from 30 million to 120 plus million to over 360 million. And look at these numbers here, 600 million for this year, up to 800, north of $1 billion by 2025. So now that's interesting, right? So they're saying right now the company has an enterprise value of 1.1 billion if they got bought out. But in 2 years, they're going to be making $1 billion. That is, in my opinion, this is a buy. In my opinion, this is a buy. And I keep saying in my opinion because it's my opinion. And in my opinion, it is a buy in my opinion. And as we see here, look at the hardware services have just tripled. And obviously their other, I'm assuming, customer service and perhaps software line has risen, looks like about 150% from 20 million to north of 50 million. Obviously, U.S., well, I'm glad they brought in a couple of million from the quote-unquote rest of the world. That's an interesting way to put it. But U.S., again, the company's based out of California. California is on this EV run. They want to go green, and, I don't know, that's what they do over there. So that's why a company like this, based out of California, that is already earning hundreds of millions of dollars before it has become mandatory to be in an electric vehicle, this company is already doing well. But again, we have our trumpet here looking at the chart, so that means it's really unclear as to whether it's going to be bullish or bearish. I could potentially see a rise here back up to like 570, 580 before it takes another leg down, back into like the 4.5 range. But right here at 5 or even sub 5, if it was me, I would be a buyer. Now again, it could drop from 505 down to 357, which is the book value. And that would be completely justified. And yes, of course, that would suck. However, if you're looking at the big picture long term over the next 2 to 3 years, as we look at the forecasts, getting involved here at 505 instead of, 465, in the end, it's not going to be a huge deal. However, if you are fortunate enough to have consistent liquidity coming in, if we like it at 5, we're going to love it at 4.5. 4.25, wherever it may, potentially drop. Again, we did the calculation. You're looking at a low of potentially $4.12. But looking over here on stock charts, we can see, yes, we have been pulling back, and we did just have a slight rally there off the bottoms, and we have been down the last few days here. However, look at the MACD curling. The MACD looks like it's about to cross and potentially curl. So, we have this downward motion happening, but in my opinion, I do feel an explosion will come potentially inside of the next week or two. Even the RSI, wait, hold on, let me go back. Look at the daily, the RSI 3126, obviously random ad. It has been sub 30 at a few times, however, has always risen up once it broke that level. So that's why right here at 31.26, it could be down another 4 or 5 cents tomorrow, but then after that, it should regain momentum and have a short-term little burst there. Switching over here to the weekly, we can see basically same thing. We have an RSI 3275 approaching that oversold mark. It has been sub 30, but only once, and then of course had a nice little rally there coming off of that bottom. So, we could have a little bit of life here moving forward. The MACD has been basically slightly falling and pulling back over like the last 7-8 months, which really isn't a good sign. But again, the company is kind of still in its infancy, and I do feel like they are going to turn this around because those jumps in revenue again look absolutely phenomenal. I don't know if it's going to get back here to 8.5, 10.29. I don't know that. This bottom Bollinger Band 457, right? And if we come down here and stretch out, as we see here, right, we're looking at 459, 460. So that's why I'm saying, it bounced off that bottom trend line, had a little bit of a rally. Now it's pulling back a little bit, could potentially drop down to that 460 level and then jump back up. Switching over back quickly to the daily. Yeah, see, that fib level we looked at before was 588. Now we got a mid Bollinger Band of 591. So that's why I'm saying that may potentially be the short-term pop. And then we could pull back to sub 5. So, again, I know a little bit of a mixed message potentially, but we could go lower. We have the potential to go higher. However, I do kind of like it here at 504, 505, wherever it is. And if it pulls back, again, to 430, yeah, it's really going to suck. And, you may be looking for blood coming back to me saying, hey, you said you like it at 5. Now it's at 4.25. I understand. We're never going to find the high. We're never going to buy it at the low, and we're never going to sell it at the high, right? You guys have been around for a while. You've been doing this. You know that. That's common knowledge. But at the end of the day, like I always say, we're talking long term, several years down the road, to begin to piece yourself in here at 5 and then potentially come back a month or two later and you still have a suppressed stock that is growing that you could buy at 420, 430. Again, yeah, it might upset you in the short term, but if we like it at 5, we're going to love it at 4.25. So load the boat, add to the position, and we'll see in a few years if this stock goes to 50 and it really pays off well for you. But I'm going to leave it there. Shout out to Fat Chin again. He was the one who said, let's look at STEM. And I like it, baby. I'm all about revenue in the actual business, and this company is growing its revenue. So if you don't have the liquidity or you're not convinced with STEM right now, you may want to throw it on your watch list and come back to this baby inside of the next potentially 3 to 6 months after all this negativity settles and take a position moving forward for the next 24 to 36 months on the minimum level, if not holding for the next 7 to 10 years. But that's just my opinion, and I'm going to leave it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like we did with this video, if there's something you're holding or something you're looking at and you want us to go over it together, I'm more than happy to take a few minutes to do that. Leave it in the comments section. Drop the symbol off. I'll throw it on the board. Not an issue. I have no problem with you guys giving me recommendations of stocks to look at. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're uncertain. So I want to wish everyone success. I want to thank you for stopping by. And I want to wish you all well moving forward. I hope everyone makes a couple of dollars. I appreciate your time, guys. Have a good day, all right?